We had an opportunity to all get together and put together our best practices and ideas, and we wanted to share our year-end checklist with you.
So as we look at the year-end, two great things to do relating to your retirement accounts and 401k are to, first off, check your contribution amounts. Confirm you are contributing what you think you are. We see a lot of people say that they're only contributing, $10,000. So confirm your contributions in both dollars and percent. Some plans enable you to make an after-tax contribution. With the after-tax contribution, you just want to check with your plan administrator around the rules and restrictions based on what amount you can actually contribute. Really important to make sure that contribution is made prior to 12/31, so you take advantage of that opportunity. Other things we think about as we also look at retirement plans are beneficiaries. Make sure you have a beneficiary on file, and make sure that your listed beneficiary aligns with the intent of your will and estate planning documents. We see a lot of life events that happen, and people don't always update those. So we really hope that you take that as an action item, and we'll make that change.
Budgeting is the money coming in and the money going out. Go through a year-end audit and lay out all of your expenses and lines of credit and take an inventory what they're doing for you, if they're necessary or not, and if there is a benefit. If a line of credit or an extra credit card lying around isn't necessary and it's not providing you a points benefit, then we would recommend reducing that and consolidating. Another is to make a looking forward budget. It's going to be dramatically different than the prior years. Inflation is out there and goods and services are rising at increased prices. So make sure you set aside extra money for those discretionary purchases as well as the necessary ones. Look at your retirement accounts and your savings goals and make sure you do have an emergency fund set up. Make sure you are fully funding your retirement account and make sure you're also leaving some disposable income for your activities and hobbies.
We often ask 3 questions with our clients that we think are really important to level set what a change in your financial plan might look like. The first question is, do I have any life changes that should be reflected in my financial plan? Do I have any large expenses that I should be preparing for? And do I expect a change in my income?
So if you're at the end of the year and you're wondering if tax loss harvesting is applicable to you, the first thing we recommend to do is have a conversation with your financial advisor and/or accountant. As a general rule of thumb, if you have a large amount of realized gains throughout the year, you can offset those with the proportionate amount of losses through tax loss harvesting. And if you have no capital gains throughout the year, you are limited at a $3,000 loss that you can harvest throughout the year, and you can carry forward that indefinitely. Ultimately, tax loss harvesting is an all year round activity. It's not just meant for the end of the year. It's a constant conversation between your financial advisor and your accountant, and the real goal is to deploy your capital efficiently all year round.
Okay, so it's year end, and I'm thinking to myself, how do I want to think about my charitable giving? It's reflection time. So, things that I would ask myself: how much do I want to give? Do I want to give? What's the best way for me to support the causes that are important to me? For a lot of people, the first idea that comes to mind is writing a check, and while that's certainly always appreciated, there are ways that you can donate in an even more tax-efficient way. You can look at your portfolio. You can see if there are any positions that have done particularly well throughout the year, and you can donate highly appreciated securities directly to charity, or you can also take the opportunity to set up a donor-advised fund.
if you're thinking about giving away some money, just make sure that's money that you ultimately don't need. Understand that there are some evolving tax law changes, but what you want to do is focus on you first and making sure that any dollar you give away is something that fits into your overall financial plan and ultimately you can sustain. Second thing you want to consider is the overall IRS gift tax limits each year. If you are exceeding a specific dollar amount that the IRS sets each year, you do want to make sure you're filing the proper reporting, which is a gift tax return after that gift is made. Estate planning documents are something that when we think about in historical forms, they're just sitting on a shelf or in a lockbox somewhere. This is an opportunity to make sure that you take advantage of a lot of the digital resources out there today, and whoever's named in those documents really understands where those are and what's inside of them as well. Also, thinking about your children. Something that we encourage you is to seek a power of attorney, especially on the healthcare side, based on when your children turn age 18. The third thing you want to focus on is just reviewing all of your beneficiary designations. This is a separate legal document that you want to make sure whoever's named in that document is in line with who you want to receive those funds. If you understand these documents can be somewhat overwhelming, we encourage you to make sure you leverage the resources that you have out there today. Work with your estate planner or even your financial advisor to really understand that any of the looming tax law changes that are out there today or some of the legislation coming down the line, how that might impact your overall estate plan, or any changes that might need to be updated immediately to make sure that you're well protected. As we wrap up another year, we want to say thank you. We've enjoyed your friendship and your partnership over the year, and we're looking forward to another great year.